Hello and welcome. You're tuned into Your Trades with me, Ankita Saxena, and with me is Snehi Shah. Well, let's take stock of how the markets panned out today. In fact, Snehi, if you look at the markets, we slipped below the 24,000 levels. In fact, we breached those 24,100 levels quite early on, and thereafter we did see that decline coming in. We managed to close around 23,900 odd levels. It was a decline of almost 300 points on the Nifty. Barring 4 odd constituents, the rest of the constituents for Nifty were in the red. Broader markets relatively outperformed the benchmark indices. Small caps could not sustain the morning gains. They closed absolutely flat, but the mid caps closed with gains for the fifth consecutive session, albeit very marginally. What did well, or probably what has been holding the fort, are the PSU banking pack, because that has been doing pretty well for the last few sessions. That was holding the fort. That was the top that did well. IT was trading under a lot of pressure. That was the one, that sector really took it on the chin today. In fact, Nifty IT, Nifty Auto was also in the slow lane today. A lot of names that were reeling under pressure, like Infosys, LTTS, HCL Tech, they all traded with cuts of more than 2.5%. So the IT pack, in fact, globally also has been taking it on the chin. There was a weak handover coming in from Nasdaq as well, and Indian IT also didn't do very well today. Also, Bank Nifty lost all the morning gains. It's closed below the 52,000 levels. It was down 0.7%. Nifty Pharma was also seen extending losses for the third consecutive session. Ajanta Pharma turned out to be the top sectoral loser. But a couple of other news flows coming in. Largely the Russia-Ukraine war has also escalated. That's also causing a lot of trepidation in the markets, Snehi.
Absolutely, lots of factors at play, but surprisingly today what has done well is the PSU bank space, amid a market that was so heavily under pressure, and you have the Nifty Bank also that was under pressure. However, the public sector banks have emerged winner out of today's trading day, because you have IOB, Indian Bank, Punjab National Bank, Maharashtra Bank, UCO Bank, Canara Bank. All of these names have ended the day in the green. Some other news flow to just touch upon: HDFC Bank was a stock in focus today, but could not hold on to those morning gains, because HDFC Bank's market cap surpassed 14 lakh crore rupees today, of course on the back of the MSCI recheck that we saw coming a few days ago. But HDFC Bank was one of the banks that was in focus today. You also had Honasa Consumer that surprisingly has hit an upper circuit of 10% today, despite everything that's been going on with that stock. When it comes to the supplier stock that they have, seem to have apparently dumped on their suppliers, and there's a whole lot of issues going on with that company as well. During the Q2 earnings call, they also flagged off that they're seeing slower than expected growth coming in for the parent brand Mama Earth. So issues continue for that company, but surprisingly it was locked in the upper circuit today of 10%. You also have an exclusive story coming in that Civil Aviation Ministry has reviewed airfare for key routes. We'll be bringing you more details on this later on the show. And you also have the government push coming in on key infra projects. This is also something that we are understanding from our sources. So lots of source-based news has made its way on to the news flow today, and lots of stocks to also watch out for in today's trade. But let's get a better sense of the kind of moves we've seen today, and for that let me bring on board our technical expert today, Kunal Bothra. Kunal, hi, thanks so much for joining us. Tell us primarily, what sense are you making of the market? It's literally been every alternate day we've seen a different kind of move coming in for the markets. We're 4 days into the week, 2 days of positives and 2 days of negatives. Tell us what you think will happen tomorrow. And yesterday, after the run-up that we had seen, it got a lot of people very excited about where the market is headed. Do you think yesterday was a one-off, or do you think the correction that we've seen today is a one-off?
Well, neither of the day was a one-off, frankly, because the markets required consolidation. And I think it's a good sign that we are getting back into that zone of consolidation for the index, because it's been a heavy 2.5 odd months for the index. The selling pressure which started off from end of September towards the point when the index formed a low at 10% to 12% downtick from their major highs. So I think now we are bound to get back into a zone of stability. What was the highlight for the day? I think it was not just the index correcting, but I would probably believe that the market breadth improving. So I think that's a positive sign to take away, because in the last few weeks we've seen the indices falling by 1 to 2%, but the market breadth deteriorated on that day, indicative that the markets are still continuing to trend lower. But when the markets or the indices fall and the market breadth tends to improve, that's what we call as a bullish sign of a divergence, and that indicates that the markets are going in for a phase of consolidation. So my expectation is that we should be able to recover over the next couple of days. But then again, the recovery could be limited. The swings should be, I think, limited to just about a 400-500 point for the Nifty over the next few weeks. So 24,000 broadly as a support and 24,400, 500 as a resistance for the index.
All right, a bullish divergence is what you see, Kunal. So you do see a little bit of consolidation, and then, of course, the bullish trend is intact, is what you see. But the one pack that is also seeing a reversal is the PSU pack, which is doing pretty well. In fact, it is holding fort in this market volatility. Are there any picks from that pack that are interesting you right now?
Well, absolutely yes, and I think that's the pocket to look out for. So we always look to buy stocks which are on the stronger side, and I believe in terms of relative strength. So two buy calls. The first one is upon Bank of Baroda. The stock looking very attractive at 248, 249 levels where it's closed today. So we'd look out for targets in the range of 262. Stop loss could be kept at 245. Container Corporation is the other stock which has been beaten down significantly over the last 3 to 6 months. That stock also looks attractive at 820. Look out for targets in the range of 850 at least, and stop loss at 800.
Okay, so Bank of Baroda and Concor on Kunal's radar. Kunal, on that note, we'll let you go. Thanks so much for joining us and sharing your view on the outlook going ahead, as well as your stock-specific picks. But on that note, now time to slip into the word from the wise segment. And today that happens to be Hartmut Issel, the head of equity and AMP at Credit APAC, CIOWM at UBS Wealth Management. He sees growth after 4 to 5 quarters. He also believes that consumption growth cannot be flat and is poised for an uptick. Let's go across and listening.
Beyond the structural factors, so you have a number of sectors that are growing actually close to zero, which is quite unusual for India, right? And consumer is one of them. I would say, some of the big oil and gas is another one of them. You have other sectors, I would mention their financials that certainly grow below the potential, where we think, over 4 or 5 quarters, basically we're in the middle of it right now. This washes into the base, so middle of next year, right, you will likely see an uptick. You will likely see a reacceleration in, if I go at Nifty, it's about 80% of Nifty's earnings weight. These sectors are affected. These sectors are accelerating. So beyond the structural story, which is certainly there, and consumer cannot, as long as India grows above 6%, consumer cannot grow 0% for 2-3 years in a row. It won't, right? So yes, there are interesting opportunities also from a tactical point of view. Maybe 7-8 months out, but it's time to position for that ahead of time.
All right, with that, it's time for us to slip into a short break. Don't go anywhere. We'll be right back.
Hi there, welcome back to Your Trades, and let's talk about the big story of the day. In fact, the stock in focus today was HDFC Bank, and as the bull makes a comeback on Dalal Street, there's one heavyweight that has scaled new life highs without hogging the limelight. A very silent player today, and that was HDFC Bank. Its market cap has crossed 14 lakh crore for the first time. So is the counter poised to surpass that 2000 level? Is the current momentum sustainable going ahead? Nikunj and Kunal standing by to put those moves into perspective.
Quietly, silently, getting unnoticed, getting no media attention, HDFC Bank has hit an all-time high. It's a good feeling, right?
It's a very good feeling. And you said 3 waitings. I'll add one more waiting because it's been almost 4 years where HDFC Bank has literally done nothing.
It's like this one of those railway ka waiting list hota hai na. Ek din to seat milegi.
Finally, I think a seat mil gayi hai. So, we looked at the last 4 years of charts for HDFC Bank and 4 years of highs. So, and HDFC Bank is one of the highest weighted stock in the Nifty 50 index.
It is India's biggest bank, highest weightage. It lifts the mood. It is the pivot. It is a market leader. What else?
The best part is, we look at just the last 4 years of high, 1725, 1750, 1757, etc. But these last 4 years, the Bank Nifty moved from 35,000 to 55,000.
35,000 to 55,000.
The Nifty moved from 16,000 to 26,000 plus. So it's not as if that the markets were sideways and this stock was also sideways. The markets rose up by 50% in the last 4 years approximately, and the stock has been stagnant in a range of 1-2% itself.
So that's the data, Kunal, what you have for us. October 2021, 1700. July 2024, 1790. And you can add another 3 months here, but it is still below 2000.
Yes, it's still below 2000. It's almost at 1810, 1820 right now, what we are speaking. But there are signs which are emerging that HDFC Bank finally has found its mojo back. The leadership is coming back. So we looked at the charts for HDFC Bank, and the charts indicate that the stock is coming out of a major hibernation. So this 2 years, 3 years, 4 years of consolidation which has happened for HDFC Bank is now resulting into the stock getting into a breakout. And if that happens, we are looking at not just a a 50-pointer or a 100-pointer rally. It could be almost like a 20 to 30% comeback for HDFC Bank, which we may expect over the next 6 months to 1 year.
So can I say ab ki baar 2500 par?
Yeah, I think 2000 par to definitely, but I think maybe 2200, 2500 could be a broad range for HDFC Bank.
Okay. So ab ki baar 2000 par
Haan.
for HDFC Bank in next 6 months.
Yes, very much possible.
All right, those were good moves coming in on HDFC Bank, but one must exercise caution while investing in spaces like beauty and personal care. That's what Vikas Khemani is saying. He adds that profitability still seems far away for them. Let's go across and take a look at what he had to say about the space.
Is a great category, as like you rightly said, women workforce increases, as premiumization happen. All the category will do well. I will not kind of say that category doing well and necessarily means that companies will do well. So you have to segregate and identify companies, individual, matrices, models, and potential. So I would just stop it there and saying that evaluate in that. Currently, we have not bought any of the names which you mentioned. Again, the correction from a 100 to, I would only say that we are not finding this still attractive. We still believe that profitability matrices is far away, and we have not been able to convince ourselves still on the valuations. Companies might be great, but we have to look at risk reward from the perspective of upside, considering the valuation as well.
So word coming in from Vikas Khemani, but time now to shift the focus to a group of stocks that have been abuzz once again after a lot of volatility in the week that went by, and that's the Adani group of stocks. Now if you take a look at select stock, the names of Adani Total Gas was up 15.8%, Adani Green, Adani Energy both locked up an upper circuit of 10%, Adani Power also did pretty well, 7.2% higher. All of these stocks have zoomed quite a lot, and this is on the back of the clarification yesterday that there are no bribery charges against Gautam Adani, Sagar Adani and Vineet Jain. Not just that, couple of days back, Rajiv Jain-led GQG backed the group saying that the said fiasco will not stir an impact on the businesses. Let's go across to my colleague Gaurav, who will put all of this data into perspective. Gaurav, take it away.
Well, yes. When we talk about Adani group of companies, we have seen a sharp decline in the stock price for the last few days, and the reason being that there was a news flow which suggested that there are charges against Adani group and at the same time promoter Mr. Gautam Adani for bribery in the US. Now, Adani group has come up with their official statement. What they're saying is that there are no charges against the promoter Mr. Gautam Adani, and he is not charged with any kind of violation in FCPA, and at the same time they have also mentioned that there are no bribery charges against Mr. Gautam Adani, his nephew or Mr. Vineet Jain. With this, we have seen a sharp recovery yesterday in Adani group of stocks. In fact, when we talk about some of the few names, we have got Adani Power, Adani Total Gas, Adani Green Energy, where the stock hit its upper circuit. And at the same time, when we talk about Adani Enterprises, Adani Wilmar, we saw a huge recovery happening yesterday only. When we talk about some of the big investors, we have got GQG partner who said that they do not see any kind of these actions having material impact on the group businesses. But at the same time, when we talk about market reaction, we have already seen that since 21st of November, when the news came in, we have seen around 3.1 lakh crores of market cap erosion from the Adani group of companies. In fact, when we talk about Adani Green, we have seen the market cap erosion of more than 2 lakh crore rupees. Now that the recovery is coming up, we have seen some of the companies like ACC, Adani Total Gas actually reaching to the level where we have seen these companies on 19th of November. But still, it will be really interesting to see how, now that the official statement have come, how the recovery happens in Adani group of companies and how the charges are placed in terms of the legal courses in the coming days.
All right, that was Adani Group in focus today, but there were a couple of other names like KE International, there was NTPC Green, Nazara Tech, all of them were in focus in today's trading session. But what was the reason for these stocks to be abuzz? Let's go across to my colleague Ria, who's standing by with all the details. Over to you, Ria.
Let's take a look at the stocks that have been focused in today's trading session. We have a lot of stocks in focus on the back of order wins coming in. First up is KEC International. They have won significant orders for the India T&D business from Power Grid Corporation worth rupees 1700 crores. There's also BEML, which has won a contract from Chennai Metro Rail Limited for a comprehensive contract for a period of 15 years, and the order has been valued at rupees 3658 crores. Ashoka Buildcon has also won an EPC order worth rupees 193 crores in Madhya Pradesh. We also have Hudco and NBCC in focus today, since both these companies have signed an MOU for the development of a land parcel of 10 acres owned by Hudco at Noida. The land parcel is likely to have 8.71 lakh square feet of built up area, and the tentative cost of the project is rupees 600 crores. We also have NTPC Green Energy in focus today. The stock was up around 4 to 5%. The first part of the capacity of 55 megawatts out of the 105 megawatts at the Shajapur solar project has been declared as commercially operational. Lastly, we also have Nazara Technologies in focus, since they have raised rupees 855 crores via a preferential issue today, wherein the company has allotted 89.59 lakh shares at a price of rupees 954.27 per share. So these are the companies that have been in focus in today's trading session.
Yeah, thanks so much for taking us through that basket of stocks that were in focus today. But with that, I'm afraid we're timed out on this edition of Your Trades. It's a goodbye from Ankita and me. Thanks so much for watching.
If you like this video, then like, share and subscribe to ET Now.